We've been saying it all along, and now a trader's reiterating that the short-term yields need to go up to encourage investors to hold the shilling. What did you make of the MPC surprise rate hike yesterday?
Well, short-term measure, I think it came at an opportune time. I believe that it is going to help the situation. We are starting to see the rains begin to cut. We've had a bit of rain, and hopefully that will ease the level of inflation locally. Of course, we still have the oil situation to worry about. And so going forward, I think, although it goes against what the CBK has been trying to do with a low interest rate regime, there was a need to, show some, lead the way in trying to at least stabilize the shilling, albeit in the short term.
Let's take a look at your outlook for the shilling, because being emphasized is that the Central Bank of Kenya will need to follow this rate hike with action that supports the decision if we are really to see this unit recoup any of its recent losses. Well,
I think in going with the free market policy, I think minimal interference by the CBK is what I really feel is the best way. At the end of the day, markets are going to move in whatever direction that the prevailing circumstances push them. So I believe that having held off for so long was really trying to get the market forces to do their bit. I think the central bank can only come in on the short term, but eventually we do expect that the shilling will settle once investors and the high demand for the dollar eases off.
In the meantime, we've got analysts expecting little reaction on the equity front prompted by that rate hike. Are you sitting in the bearish camp at this stage as well?
Well, I'm beginning to become a bit more optimistic. We are seeing about 43% activity on the foreign front. And usually this signals a better time for our market, seeing that the foreign investors have had a very strong effect on our market in the last 1 or 2 years. And I think the fact that they had pulled out largely at the height of the North African crisis, I think seeing them come back into the market is going to push volumes up. It's going to push some of the stocks will begin to see a bit of recovery, especially the blue chips and most of the stocks that have a market capitalization above 5 billion.
Looking more short-term and more immediate, where we've seen this NIC 20 index down just over 10% year-to-date, what are your expectations for the trading day ahead?
Well, I expect that we are going to see it stagnate for a bit as investors try and figure out what the effect of the CBR change will be. So usually we do expect that for a day or two we might see investors take a wait and see stance so that they can try to at least gauge what direction the market will take, what effect these rate change is going to have, and if any. And of course, as we go forward, we are hoping that the inflationary pressures will ease, and we are going to start seeing another bullish run.
Having said all of that, we had President Mwai Kibaki say yesterday that Kenya will be fast-tracking laws to implement its new constitution, set up a Supreme Court and reform its judiciary as well, where it's missed the deadlines in implementation on all those fronts in the past. To what extent has this offered some reprieve for the markets from the political side of things?
Well, I'm quite excited about the fact that the politicians are beginning to see eye to eye. I'm not sure if that is what I should be reading into it. I'm not a politician, but I think that we are beginning to see a way forward. There seemed to be a bit of consensus on the ICC issues. The fact that they have said they're going to fast-track the judiciary issues means that we might at least begin to see the implementation of the Constitution have a positive impact on our economy. I think the wrangling, although it has not had a very heavy effect on our economic and market fronts has had an effect. And so the more political goodwill we see, the better for us.
In fact, Kenya's economy seeing good prospects after expanding at an estimated 5.4% in 2010. We've seen some data filtered through, though, pertaining to the agri space. And of course, this is a major revenue earner for the country. Samuel, tea exports having dropped 14% in February. One would assume to a large extent, though, this had been anticipated by the markets, where we know that sales to Egypt had been interrupted over the period.
Well, I think they have started to show recovery. We have, especially since the Egyptian situation was resolved or is in the process of being resolved. I know it will dent their bottom line, especially on the agriculturals, and I know that on the export side we have that issue. But we are seeing a huge influx of tourists, and so the tourism side might come in and balance what we have lost on the agricultural side, and seeing tourism has now taken a very front line in terms of foreign exchange earnings. I believe that it might have a balancing effect on the whole situation.
In terms of how you play this within the market context specifically, would you be opting then to delve more into the tourism stocks as opposed to some of the agri players, your tea producers, standing in the spotlight?
Well, I'd be going back into the agricultural, seeing that now we do expect that apart from the fact that their bottom line might be affected, they had lost a bit of ground in terms of price. So bargain seekers could have a go at those. But I'm also very keen on business tourism, and hoping that that is going to have a positive impact on both Kenya Airways and TPS Serena, which are the main ones who tend to get the advantages when this is good.